Hey guys, welcome back. Hope you all are doing well. In this video, we'll talk about the different type of bank account and deposits. Specifically in this particular video, we'll talk about the saving account, current account, the fixed deposit, recurring deposit, and Demat account. We'll discuss the differences between demand liabilities and time liabilities, as well as the CASA deposit and RAFA deposit. Okay. The only request is please do like the session and do share with your friends so other can also watch this video. And please, if you are new to my channel, please do subscribe. Okay. Guys. I hope so many times you guys heard about CASA deposit and RAFA deposit. Okay, so first you need to know the abbreviation of CASA and RAFA. So CASA, which is stand for current account and saving account, and RAFA, which is stand for fixed deposit account and recurring deposit account. Okay, so now if you talk about the CASA deposit, they also known as demand deposit. Okay, so they also are known as demand deposit. Why they generally call demand deposit? So we will discuss in this particular video. And if you talk about RAFA deposits, they also known as term deposit or time deposit. Okay, so because they are generally for a fixed time duration. Okay, so CASA deposit, they can be demanded by any time by the customers, and RAFA, they are generally a customer, they generally deposit their money for a fixed time duration, so they have a specific maturity period. Okay, so we will start with saving account, then we'll come to current account, then FD, then RD, and then Demat account in this particular video. Okay, so you will be able to identify everything about these five deposit. Okay, whenever we talk about bank accounts, so as I earlier told you, these are generally known as CASA deposit, current account and saving account, and they also known as demand deposit. So why they generally known as demand deposit? Because customer can demand these particular deposit anytime. Okay, so bank, they have to maintain this amount of cash in their bank branches. Okay, so like let's say if you have 10,000 rupees in your saving account, so whenever you require that particular money, so you will have a request for withdrawal. So you can withdraw by using ATMs or by bank branch or by checkbook and all. So bank, they have to maintain that particular one. But in case of RAFA deposit, these are generally called RAFA deposit, recurring account, recurring deposit account, and fixed deposit account. So because like when you open FD, let's say you open an FD for a period of 10 years. Okay, so that particular money is generally for 10 years. You do have that pre-maturity benefit in case of RAFA deposit. So but here, like whenever let's say you open a FD with any bank, and the maturity period is 10 years, so if you want to pre-mature that particular one or pre-close that particular deposit, so bank will generally ask for a closing time duration, which is usually 7 working days. But nowadays we working on CBS system, so usually you'll get that particular money within 24 hours or 1 day or 2 day. Okay, but they cannot demand it on time basis. Hope you get the basic differences between these two. Now we will start like what is saving account or what is current and other accounts. So first account is savings account. So this is very simple one. Everyone nowadays, they have saving account. Okay, so saving account basically, if you talk about, we being an individual or small businesses, they generally open saving account with banks. Okay, you can open your saving account with bank. I hope you have your saving account with some banks in India. Okay, so the purpose of saving account is to promote saving. Okay, so like if you will hold that particular cash with you, so there is a so many risk involved. So that can be like there are so many that cash can be stolen or any other problem as well. Okay, so first, the primary objective of saving account is to promote savings. So people, they generally through with this particular accounts, basically bank, they are generally promoting savings in Indian economy or even in some other economies as well. And when you deposit your money with bank, they generally give you certain rate of interest on these particular deposit, and bank they further use that particular money for the credit creation in the economy. Okay, so let's say they borrow money, like if you I hope you remember the definition of bank: borrowing for the purpose of lending. So they generally accept deposit, and then they give that particular amount to someone who generally need a loan. It can be any retail house or any retail customer or any business houses and all. Okay, so rate of interest that generally offered on saving account, but it generally vary from one bank to another. Okay, so usually 2%, 2.5%, 3%. So this much of rate of interest you'll get on your saving account, and the rate of interest that is generally calculated on daily basis. Please listen carefully. This is very important point. Okay, so the interest on saving account that is generally calculated on daily basis, and it is credited on quarterly basis. Okay, let's say you have 50,000 on an average balance for next 3 months. So the interest on 50,000 will credited after the quarter. Okay, so quarterly basis basically bank do this particular transaction. Okay, so please do remember this point. Calculation is generally happen on daily basis, and that interest amount that will credited on quarterly basis. If you talk about the minimum balance, so in case of saving account you have to maintain a minimum balance. Okay, if it is a salary account you do not have to maintain the minimum balance, but if your salary is not crediting, or let's say you done with that salary account, you switch to some other bank, so after 3 months that bank or that account will automatically convert it into saving account. Okay, so in saving account you have to maintain a minimum balance that again vary from one account to another. Nowadays we have, I hope you heard about that BDA, basic saving bank deposit account. So these are also known as no frill account, and now it is converted as Pradhan Mantri Jan Dhan Yojana. So if you open account under Pradhan Mantri Jan Dhan Yojana, so you do not have to maintain any minimum balance. So there is no minimum balance required to maintain these kind of accounts. Okay, so I hope you get this particular thing clearly. Now, if we talk about the current account, so current account, these are generally suitable for firm or businesses because they have to do number of transaction in a day. In case of saving account, they are the transaction limit. They have some transaction limit. Like you can do 4 time withdrawal in a month. After that, like if you do 5 times, 6 times, so bank will charge some amount. Okay, but in case of business entities, let's say if you are running a business, so in a day you have to do number of transactions. So for that, bank they generally introduce current account. So now they are giving you some liberty, like you can do number of transactions, but the condition is there is no interest bear on these particular accounts. So in case of current account you will not get benefit of any kind of interest bearing and all. Okay, so basically these are for business purpose, and there is no transaction limit on these particular one. And another facility is overdraft facility. Okay, so these account also provide the OD facility, overdraft facility. Now what is overdraft? So it is kind of it is part of advances. Okay, short term loan you can see. So let's say if you are running some organization, in your organization current account, okay, so you have current account with some XYZ bank, and in that particular one you have 10 crore rupees. Okay, so on the basis of your past history, bank give you an overdraft facility of 2 crore rupees. Okay, so bank they generally allow you an overdraft facility of 2 crore rupees. So let's say in sometime if let's say if you have to make a payment of 11 crore rupees, so 10 crore you can use your money, and 1 crore you can withdraw from your overdraft facility. Okay, so for payment of the overdraft you have a given time duration. So at that particular time period you have to repay that particular money, otherwise bank will charge some interest and they'll make some penalties as well. Okay, so the basic difference between saving and current is basically saving account is generally for personal purpose or individual to promote saving, and current account is generally for business transactions. Okay, so business purpose we can say. These are the basic differences. So purpose is to encourage saving, and there are many transactions along with overdraft facility, ideal for common person, and this is for business enterprises. Okay, or business entities. Minimum amount, if you compare minimum amount in both the accounts, you have to maintain the minimum account balance. But if you compare in saving account it is lesser as compared to current account. So rate of interest is around 2.5 to 3 or 4%, or 5 is higher side for senior citizen and all. And in case of current account, there is no rate of interest provided by banks. Okay, overdraft facility is not allowed in case of saving account. In case of current account, it is available. Now there is a question about, I hope you have heard about the PMJDY, Pradhan Mantri Jan Dhan Yojana. So in Pradhan Mantri Jan Dhan Yojana, you have a overdraft facility of 10,000. So first thing you need to be clear, because that PMJDY is a government sponsor scheme. It's a government scheme. Okay, so this is not a normal saving account. In case of normal saving account, there is no overdraft facilities provided by the bank. But in case of PMJDY, so if your account is in operation from last 6 months, so you can take a benefit of overdraft facility up to 10,000 rupees. Okay, because it's a part of government sponsor scheme, right? So hope you get this particular thing clearly, and the difference between the saving account and current account. Now, as I told you, CASA deposit, they also known as demand deposit. Why these deposit are known as demand deposit? Because these deposit can be demanded by customer anytime. Let's say you are running some business, you have 10 crore rupees in your account, so you may need that particular money anytime. Okay, so whenever you require that particular money, you'll have a withdrawal request. You have 50,000 rupees in your saving account, so whenever you'll require that particular money, so you will make a withdrawal request. Okay, so that's why, so these deposit can be demanded by any time by the customer. So bank, they have to maintain a limit of cash in their banks, so or in their branches, so they can manage these kind of transactions. Okay, so current account and saving account are demand deposit. They can be demanded anytime by the depositor. Hope you get this particular thing clearly, and do remember this one. So many time examiner generally ask CASA deposit is also known as. Okay, now next one is fixed deposit, or term deposit, or time deposit. Okay, so fixed deposit is FD. I hope so many time you heard about like FD transactions, or your parents, they usually invest in FDs and all. So it is a lump sum investment. Let's say you invested 5 lakh rupees at the rate of 7% per annum, 7% per annum for 10 years. Okay, so this is the case of lump sum investment. So you have a lump sum money and you invest it at a fixed rate of interest for a fixed time duration. So that is generally known as fixed deposit. So as the name states, fixed deposit. So it is a lump sum money for a fixed time duration. Okay, so here the customer deposit a certain sum of money for a fixed period, which is not withdrawable before the maturity period. Okay, so you do have that pre-maturity benefit, but for that one you have to give time to bank. These, like, that means you cannot withdraw fixed deposit on demand. Okay, so you have to wait for that processing period. Rate of interest charge on these deposit is normally higher than as compared to a saving account and recurring deposit. In current account, we do not have any rate of interest, so here you have that particular benefit. Okay, so hope you get this particular thing clearly. So FD is a sum of amount where we generally invest money for a fixed time duration. Now there are few feature about FD. So FD can be open for a tenure of minimum 7 days and maximum 10 years. So whenever you plan for a FD, so bank in India, they generally offer FD for a period of minimum 7 days and maximum for 364 days. For 10 years. Okay, so this 7 days concept is also known as flexi deposit. Like, let's say if you have current account and you have limited business transactions, so nowadays, to attract customers, bank, they generally came up with flexi deposit. They do offer you these kind of services. Okay, interest rate vary from one bank to another bank. So every bank, they are generally offering you different rate of interest. And premature withdrawal of deposit is possible, but you have to wait for the that processing period, or as you premature your FD, so there is a loss of interest rate as well. Loan facilities available on principal as well as interest on FDs. Okay, and even, like, let's say you invested 10 lakh rupees and this is your principal amount, and throughout the period you get 1 lakh rupees interest amount. Okay, so total value is 11 lakh rupees. So you can place this particular FD and you can take a loan against this particular one. Okay, so you have total 11 lakh rupees. So you can take loan against this particular scheme as well, or this particular FD as well. Okay, hope you get this particular thing clearly. Now recurring deposit. So what is recurring deposit? So as the name states, recurring. So it will come every month or every quarter or every half yearly or yearly basis. Okay. So in case of FD, what was the difference? In case of FD, you deposited 5 lakh rupees at the rate of 7% per annum for 10 years. But this is a lump sum deposit for a fixed time duration at a fixed rate of interest. In case of RD, recurring deposit, you have, like, you do not, let's say you got employed, recently got employed with some bank or some other organization. Now you plan your you did your financial planning ki after 10 years you'll buy a house, or you'll buy a car, or you'll go for further studies and all. So after 10 years, let's say you need 15 lakh rupees. So you started investing from today itself because you do not have 5 lakh rupees in your hand. So you start with small savings. Okay, so let's say you started 10,000 rupees per month. So here we have per month. Okay, the rate of interest which is offered by bank is supposed at 6.50% per annum, 6.50% per annum for 15 years or 10 years. So this is your recurring deposit. So every month you are depositing 10,000 rupees at the rate of 6% and for a fixed time duration. So here, as you can see, the rate of interest is fixed again and the time duration is fixed. The only thing is that generally change here, you make a lump sum investment in case of FD, but in case of RD it is recurring in nature. So every month you are depositing 5,000 or 10,000 rupees in that particular RD. Okay, so customer remit a certain sum of money on monthly installment, or it can be quarterly or half yearly or yearly as well, for a period ranging from 6 months to 120 months, which means 10 years. So minimum for RD time duration, minimum is 6 months and maximum is 10 years. Okay, on a uniform pattern. Uniform pattern means if your installment is monthly, so it will remain monthly, or it is quarterly, it will remain quarterly. The entire amount along with interest is payable after the last installment. So after the 120th installment, so you will get principal as well as interest. Okay, in India, minimum amount that can be deposited in RD is 100 rupees. So you can start RD with 100 rupees per month or 1200 rupees per annum. Okay, so this is the minimum deposit which is generally accepted by banks and other financial institutions in India. There is no maximum limit, but there are some banks, those who generally cap at 15 lakh rupees, or even they advise customers, no, don't go for higher denomination because like time is uncertain. The period of deposit is minimum 6 month and maximum 10-year, which we earlier discussed. So I hope now you get a basic difference between FD and RD. So FD, as the name states, fixed. It is a lump sum amount which is generally deposited for a fixed time duration. In case of recurring deposit, it is like every month you are investing that particular money for a fixed time duration at a fixed rate of interest. Okay. Now RAFA deposit, they also known as term deposit. Why they known as term deposit? So I already told you, because like in case of FD and RD, that amount is generally that bank that generally hold that particular money for a fixed time duration. Like you open FD with 5 lakh rupees at the rate of 7% for 10 years. You open RD 10,000 rupees per month at the rate of 6% for 5 years. So in this particular case, in both the cases, your time duration or maturity period for that particular product is fixed. So RAFA, our term or time deposit, they can only be withdrawn by the depositor on maturity. You do have prematurity benefit. You can pre-close these particular one, but if you pre-close, so you will bear a loss in rate of interest, as well as bank will charge some additional amount for the pre-closure of that particular documents, and they'll ask for the some processing period as well. Okay, So hope the difference between demand liabilities and time liabilities is clear to all of you. Still, if you have any query, guys, please do mention in comment section towards CASA and RAFA deposit or demand deposit and term deposit. Okay. Along with CASA RAFA, there is another account which we so many time. I hope you heard about this one. So that is Demat account. Okay, so Demat and trading account. We have two different accounts. So Demat, where do you generally hold your securities in electronic manner. So Demat means dematerialization. So dematerialization means electronic forms. And trading account is basically an account with share broking firms through which you generally trade in securities, like you buy and sell shares. Okay, trade means buying and selling of securities. Okay, so now whenever you talk about these accounts are generally used in financial market. Let's say if you want to invest in shares, bond, mutual funds, commodities or currencies, so you need an account which is generally known as Demat account. So Demat account where you generally hold these particular securities, and trading account is generally used for the trading purpose. So with the help of trading account, you buy and sell these particular securities. Okay, so we have two different account basically. So a Demat, which is stand for dematerialized account, or dematerialization account, which means electronic forms. So this word dematerialization means electronic form. Okay, so where these are the account where you can hold shares in electronic manner. So previously, when we do not have this Demat account system, so like when you buy or when you purchase any shares or bond, so the issuing entity, they generally issue you some certificates. So when you will hold things in certificates, so there are so many risks which are generally associated with these particular certificates and documents. It can be missed out, it can be stolen, or it can there can some other challenges as well. Okay, or even the liquidity problem. So if you have to sell this particular one, you have to go exchange. So with the help of Demat account, you can buy shares by own, or you can sell them, or you can convert, with the help of Demat account, you can easily liquid your investment into cash as well. Okay, so there are so many benefits which are generally associated with these one. So an account to hold financial securities in electronic form, so that is generally known as Demat account. In India, Demat account are maintained by two depositories. So we have two depositories in India. One is NSDL and another one is CDSL. National Securities and Depository Limited and Central Depository and Service Limited. So these are the two depositories. So depositories basically who kept the information about the overall sale purchase of securities in Indian market. Okay, so we have two depositories. One is NSDL, so which is owned by NSE, and CDSL, which is owned by BSE. Okay, so whenever you open your account, so your detail or your account is generally managed by NSDL and CDSL. So Demat account is, as the name states, it is dematerialized account, electronic form. So where you can hold financial securities in a electronic manner, and with the help of this particular account, you can easily buy and sell securities. You can liquid your money, liquid your securities, or you can transfer them, or you can hold the market position, or you can analyze your portfolio size on real time basis. Okay, and trading account is basically we generally use for the trading purpose or for the buying and selling of these particular securities. Okay, so basic is like whenever you open your Demat account, along with this trading account will automatically open. Okay, so guys, in next video we'll talk about these particular account like Nostro account, Vostro account, Loro account, NRE, NRO, and FCNR account. Okay, I hope so many times you heard about these particular one. So in our next video we will discuss these particular accounts in detail. Okay, so hope you enjoy the video. If you like, please do share with your friends so other can also watch these videos. And if you have any query related to these particular one, so do mention in comment section. And if you are new to my channel, please do subscribe. So thank you for watching this. Stay tuned for more. Thank you. Bye bye. Have a nice day, guys.